What's up, guys? Welcome back to the channel. Today I'm going to give you the key levels that I'm watching for the coming weeks. So stick around, get the key levels, and get some profitable trades on. All right, so we are looking at the Aud Cad Pair, and as you can see, the last few weeks have been nice up weeks, and the reason being is quite simple. It's because look at this. We had equal lows here. Price took out equal lows, which means that if people were buying in this area, they tend to place the stop below the equal lows. Let me make it a bit more clear for you guys. So this is the level. If people buy in this area, the stop goes below here. So you essentially get a lot of selling below here, but then within 2 days, we're back above that level with a violent move. And it tells me that people that were being stopped out, that liquidity is being absorbed by a bigger player, and that essentially gave me a long bias. However, I didn't get any entry in this area, unfortunately, but this was definitely a key level that I was watching. Now, if we take a look at more recent bit of price action, we took out this decently important swing high. We retested this supply area. For now, I don't have any trade ideas. However, this level to me is key. And if I get my short setup in this area, I will definitely up the risk. The reason being is quite simple. If we take a look at what happened here, this is a key swing low that created this up move. As soon as we took it out, demand came in and price went up. If I see the same thing happening here, I know that if people are shorting in this area, the stops are being hit. Also, if there was any liquidity resting above this key swing high, which usually happens, that got hit as well. And then if I see clear rejection, so as soon as we break above here, we quickly fall below there, I will definitely be taking a short, because that just shows me that someone with a lot of capital entered a short position and I want to be with him. So that's what I'm looking at in the Aud Cad. If you want to mark out the levels, this is the one you want to be having on your chart, if you even trade the pair. AUD USD, very interesting stuff. If you take a look at what happened, we took out this major swing low that created this up move. We took out this major swing low that created this up move. And that happened here. And again, the same story, guys. As soon as we take out the low, we get this quick move up. So that gave me a long bias. Again, also, unfortunately, in this pair, I didn't get an entry on, but it does give me a strong long bias. And for this pair, the same thing remains. This is the next key swing high. So if price goes there and does the same type of thing we see here, then I would be looking for a short. It's very simple, and it happens over and over again that if prices take out false breaks at highs, then you get these nice moves. Look at this. This is a key swing high. High taken out, price going down. This was a key swing low, taken out, price going up. Here we have the key swing low taken out, price going up. So I want to see the same thing happening here to get my entry on. And as you guys know, I trade fully mechanical. But if my setup happens at a great location, such as that one, I increase my risk, because I've been trading my strategy for so long. I've been journaling for ages, so I know when my setup works better. And it's such a shame to not risk more if you know that your setup works better in certain occasions. So that's what I do. Now let's take a look at the Euro AUD. Again, the same stuff happened. Key swing high taken out after an extended up move and price just collapsing down. Key swing low taken out. I know this is hindsight, but I want to show you guys that if you pick the right location for a trade, you can really get some profitable ideas. This is a key swing low. Reason being, this is the origin of this entire up move. As soon as we took it out, we went up. Then we formed here a key swing high. As soon as we took it out, we fell down. So for now, the next key level, in my opinion, basically two. This one still remains key because of these two equal highs. So a false break up here and a quick move down would give me a bearish bias. And then this particular area, because we got almost equal lows there, and we know that when there are equal lows, there tends to be liquidity resting below, and people tend to get fucked at those areas. And I basically enter at the area where people get fucked, if that sounds good. So that's just what I do. Again, if I get a setup anywhere in this area, I will be taking it. But if it happens at this area or at that area, I will be upping my risk. So those are the key levels in this particular pair. Euro CAD. If we take a look at what happened, we had this key swing low, key swing low. Price took it out and quickly went up, retested, and then made a new high. So that gave me a bullish bias. What's also interesting is that we didn't take out this. So we have liquidity resting above these highs. So my bullish bias remains. In my opinion, that area, if I go to the hourly time frame, that area is the origin of the entire up move. Well, this is the origin, but this is the last bit of structure created before this impulsive move. And this would be a key area to look for long. So if I get my setup here and potentially we take out these equal lows, then I will be getting a long on, if the rules align, of course, to target the key swing high, because the bias is still bullish, and especially because we have these equal highs above market. So I would say highlight this blue box on your chart if you want to be trading at a key area, and highlight this level, because you can bet that if price goes up here and quickly does a false breakout of that high, something similar that we've seen at this key low, you can expect a bit of a retracement back down. So that's it in what I'm looking at in this pair. Let's go to the euro dollar. Same thing happening again, guys. Key low taken out. This is the low of the entire range. And we quickly go up. Key high taken out here, and we quickly go down. Happens over and over again. And in terms of profitable trading, it's often about a setup and a location. And if you get the location right for your setup, you can usually get nice trades on. So in terms of the location, if you just trade at these key locations and you know why you're looking for a short at this location and you're looking for a long at that location, then you can really build a profitable edge around it. And these are the concepts that I dive in depth with my coaching clients. So they know, when they see this chart, they know exactly what I'm talking about. So that's great. For now, we're a bit in the middle of nowhere. I would say highlight this high. This is the one that created the down move, and you can expect a bit of a rejection there again, and highlight this key swing low. And you want to see this happening there. So false break of the low, and then a quick move back within the range to get a nice trade on. Now, I'm not going to go over all the pairs. Let me show you this pair as well. One of my favorite pairs. And look at that. Key high created this down move. We take it out and we reject down. It happens over and over again. This was also a key high lined up with this. As soon as we took it out, we did get a bit of a drop there. Again, sometimes you get a huge move, sometimes you get just a bit of retracement, but you can bet there will be some kind of retracement there. And it's an excellent opportunity to get a trade on. So for now, I am on the sideline on this pair. And if we take a look, we have some equal lows in this area. So I would love to have my setup in this area to get a long on to go to the upside. So if you're going to highlight key areas, highlight that one and highlight this one. Those are the most important areas. False break here, I would have a long bias. False break to the highs, I would have a short bias. GBP, GPY, interesting stuff. Again, the same stuff happening. I'm repeating myself over and over again, but false break of 2 daily equal highs and price falling down. I didn't get an entry up there, unfortunately, but if I did, I would be balls deep. risking way more than I usually would because of the location. If the location is great, guys, the odds of winning can really, really increase. From journaling, I know that if I just take my trade anywhere, the win rate is between 60 and 65%. But if I take the trade at a great location, like, for example, that one, then my win rate tends to go up to 70 to 75%. And I would be an idiot if I wouldn't be risking more on those trades. For now, we have 2 equal highs. So mark in that level. And if you get a false break here, it would be an excellent opportunity to look for a short. This is a key low because this is a violent V-shaped swing that created this up move and that took out the highs. So those are the 2 important levels on this particular chart. And now I'm going to skip a few, but I'm going to give you gold because there's some interesting stuff happening. And I already highlighted some stuff, but gold just loves to do false breakouts, guys. It loves to do it. Here we have a great example, multiple equal lows taken out and price going up. And then again, this low got taken out, price went up. We took it out again and price went up. And because of this candle here, I had a bullish bias for the past 2 weeks or so. And then, well, if you've been paying attention, you know what's next. Key high, take out the key high, and price now is collapsing. And especially if this happens, so if we have a false break after an impulsive move like this one, you can bet there's going to be a retracement. Of course, nothing works all the time, but just highlighting these areas. So if I would be going over this chart from scratch, I would be highlighting this swing high, this swing high, this swing low, this swing low, these 3 equal lows, and then we got these 2 equal highs here. These would be the key areas to look for trades, in my opinion, and not just shorting it, but waiting for the false break at those areas, just like we had seen here. So that's it for today, guys. Hopefully you learned something. Hopefully you can use the levels. Just mark them on the chart. You don't have to trade them, but just see how it works out and how price reacts to this level, because you will often see some form of rejection there. So see you in the next video. Please leave a comment if you liked it, subscribe to the channel, and then I see you next time.